about bankers not taking pride anymore, being slightly embarrassed. And I do think this goes to professionalism. As a panel, we'd like to see two things. One is a duty of care on financial institutions in respect of their customers. There's something very similar in Dutch law already, which we're looking at very closely and how that would work in practice. So that's a duty to put the customer's interests first. Of course banks have to make money, of course they do, but they need to put the customer, and a very simple duty of care enforceable in law we think would help. We'd also like to see more professionalism, so that people would not necessarily stand up and do an oath. That's not very British actually, but but something similar. So you're part of a professional ethical organisation that says, actually, as a banker, I go further than regulation. I know I have to abide by the law, but actually I go further in serving my customers and doing the right thing. And there must be sanctions then. If you don't meet the ethical standards of your profession, then like a doctor or a lawyer, you should leave it. I think there do need to be some quite sharp sanctions there. The other thing I'd mention is the cooperative business model. And I'm wondering what learnings there are for commercial banks when looking at the cooperative model. So we see in the UK, it's roughly 30, building societies are about 14% of deposits and mortgages, but only 2% of the fines. The complaints against building societies and other mutuals are far lower than they are for banks and commercial organisations. So there's something in the mutual model. I mean, there's the alignment of interests between customers and shareholders because they're the same thing. But apart from that, there is something in that model that actually seems to naturally behave a little more ethically. And final point I'd leave, I think we've also looked at consumers don't know when they buy a product or a service, they don't actually know what they're getting. I mean, in terms of the organisation, we did some work with consumers. They're all as bad as each other, they're all at it. We can't choose. So consumers can't exert any meaningful competitive pressure with an ethical outcome because they just don't know, or they assume they're all as bad as each other. So we've been looking at some metrics that might help people distinguish between financial institutions on the basis of ethical behaviour. Of course, the famous case in the UK was the cooperative bank, which was pretty ethical, but it actually turned out that the boss was maybe not quite so personally ethical. And customers actually deserted the bank in droves because they joined it because it was an ethical bank. So a little bit of the reverse of the story. I think I'll leave it there. Thank you.
Thank you very much. I think we have the number of complementary arguments, starting from a very hard way of speaking about incentives, material incentives, matrix incentives, to immaterial incentives, have to do with belonging, with culture, with the position of representing a community and being part of a community. And then we move to how we can put it in a kind of structural order, speaking about the governance issue. So I think we should stress the hardware of incentives and the software of culture somewhere. And in the incentives, in the hardware, I also put the organizational aspect. And in the software, we have the culture of institutions, the culture of the professions, which is very important. And thank you very much for bringing the Dutch example. I think that something similar is happening now in Australia, exactly the same way. And there is some thinking about how professions could become partner in the ethical discussion in the financial sector as being holders of a kind of deontology or code of conduct that makes them to some extent independent from their employers and gives a freedom of response, and maybe it's a that could solve or help solving the warning issues that we have discussed, the whistleblowing issues that have been mentioned in the previous the end of the previous round. I think we have now to reflect how culture can be monitored somewhere, because culture itself, and you mentioned the Financial Conduct Authority, who can and is it possible to monitor culture, be it from the board level, from let's say management committee level? Where can the culture be monitored, and how culture can be pushed to integrate these ethical dimensions we mentioned before in the sense of immaterial incentives, and then material incentives would follow probably. But how can culture be put somewhere on the radar screens of management, of governance bodies, and maybe on regulators? Do you have some thoughts about it? Yes?
Personally, I don't think that you can make culture a subject to regulation.
No.
Because there's no result, or there's no this is the best culture. But what is very important is that the culture is transparent to all in the organization and the stakeholders in the organization. Let me give one example about company culture and a signal of company culture. And I will again use Nordea, as I often do when I have to find bad examples these years. It's a company, it's a very successful financial companies. They have created record results each year during and after the financial crisis. 2 years ago, the management sent out a message to all the local management that they have to remove the trash cans from the offices, because they decided that it would be cheaper if they shouldn't empty all those trash cans in every office every day. So they removed them and had only one in a central place in each branch, so that the financial advisors, the workers, they should carry their trash, their paper to this central place, because then you can save some money and have a higher return on equity for the owners. So this is company culture, and this is a really pure company culture. But what sign is this for my members when it comes to being proud of their work? We have a company creating record results, but we cannot afford to empty our trash cans. Is this a company to be proud of working in? They are proud of working with their customers. They do it every day, try to do the best that they can, but they lose pride in their company.
That's a sad story, but do you have a good story?
Yes, I will turn to Denmark, because Danske Bank, the biggest bank in Denmark, has had a really rough time during the financial crisis, and they hired the chairman of the board were hired as CEO for some reason. He was in fact very good at running ships, but not very good at running banks. And he tried to optimize the way they communicated, the way they treated customers, and it was a disaster. They fired him. They hired a new guy, Thomas Borgen, and his first take on running banks is, this is about customers. We only have 2 targets in our bank. We only measure 2 things in our bank. It's customer satisfaction and it's customer loyalty. This is the only thing that they want to measure in the bank. It's a really long road to go also to the middle management and local management to have them obey this order. But in just 1 year, we could see that the people employed in the bank, when they hear those signals that it is about customer satisfaction, in fact, it gives them pride, because this is what they want to do, this is what they want to achieve: customer satisfaction, customer loyalty. And it is really not that hard. And I might add, when they ran this as an experiment in some local branches. And what was very interesting is that when customer satisfaction is going up, customer loyalty is going up, the result of the branches is also increasing. So this is very interesting. So why don't they? Why don't they do so? To me, I'm an old banker. I know, oh, this makes sense. Of course it does. Focusing on the customers.
Thank you very much for having the two sides of the story. It's very important. I think the financial industry, after the crisis, lost 30 years in learning things, that now it starts to learn maybe. At least in some major institutions, there is this thinking about culture. So I don't know who wants to. Yes? Yeah, yes, please.
I think we all know that it's extremely difficult to influence. Can you hear me? Difficult to influence culture, and we always speak about that. They have this nice saying in England. I think culture comes for breakfast and is eaten before lunch. It's very lip service. I remember I was 3 or 4 years ago at an event organized by one of the biggest banks of Europe. I won't give their name, here in the Conseil Noble. You know, all the important people were there, MEPs, commissioners, and somewhere in the back, you know, there was a chair for me and so, and music, wonderful event. And I still remember this chairman said, we have had all these crises, we have all these problems, we have understood, we have changed the culture of my bank. So, and I said, wow. Now, as such, I have some sympathy with this because the tone comes from the top. If the chairman wants to change, wants to have ethical behavior, this is very powerful. Still, this bank got into a number of scandals afterwards. So, it is extremely difficult to change an organization with 30, 40, 50,000 people. If you're in a cooperative, it's maybe a bit different. But if you have these enormous organizations, so let's be a little bit modest there. I know that the Dutch again have, the Dutch central bank sends to the boards of the big banks a psychologist. He's sitting there. He observes the board. Now, you could say in the first hour, the chairman, if it's a very dominant chairman, he controls himself, he holds back because the psycho is sitting there. But he cannot do this for 4 hours.
That's exactly.
He cannot. And they make reports how the board operates. Is there checks, are there balances? So these are also interesting things to see whether the boards can be influenced. But I can only say it's, in my view, an extremely long process that needs to be pursued for a long, long time.
But there needs to be a will, a driving force in the process. So it's not only the duration, but also the push somewhere.
Yeah, and awareness.
And it has to be there.
Yeah.
Yes? Go ahead.
There must be this vision,
Huh?
vision, because we're talking about culture, but I think we should also, you know, discuss about a vision that actually then creates the fabric of a culture and the behaviors, be it at the individual level, within the bank, within the financial institution, but also among the customers, the investors. I think it's you know, you were asking us to go across the macro, meso, and micro. Let me just try to catch a few brushes at the 3 level. Even within the ethical world, the ethical banking world, there are lots of debates and lots of discussions and lots of diversities as well. We are one of the members of the Global Alliance for Banking on Values, which is the alliance of all the ethical banks. A very, very strange creature in many ways, because you do have a variety of cultures within what you would imagine to be a common shared vision. But to our amazement, you know, there are some ethical banks that do not frown at the idea of, you know, putting their money into the fiscal havens, which for us it would be a kind of a scandal. So this is a kind of a macro level that we are working within the ethical world, and I think also in terms of giving push, which affects the governance, which affects the culture, is your political profile, the political profile that you want to have. I think it's important, for example, for the ethical bank, in our experience in Italy and Spain, to be
some of the, most vocal advocates against fiscal havens for the taxation on financial transactions, being the ones that practice and preach for a kind of a salary balance, a retribution balance, so that we have a ratio between the director and the lowest level. I think these are all elements that, because they are made part of our communication, I think we can say, I mean, I would not to sound as a boasting, but I think we can say that we are the one transparent bank, because everybody can go to our website and will learn how we use the money, which projects we finance. This is, it's all of them. So I think today still we can claim this. But this actually, all these elements together do permeate, do shape the governance at a very serious level. I mean, I am a member of a board. I had to raise a certain number of signatures to become eligible for vote. I am voting. All the governing bodies of the bank are actually elected in an assembly, a pretty kind of a crowded assembly. So this will have a reflection on the way that I operate as a board member, indeed. And that is also very important. I would also like to make a final statement concerning something that Sue was saying earlier, that consumer cannot exercise any pressure. I would like to say that this has two implications. Consumers cannot have, may not be able to exercise any pressure if they are individually, facing themselves individually with the financial entity, with the financial firm. But if they are a community, they do manage to exercise this pressure. And it also tells us that the financial system has to be always connected with other industrial systems, or with the policy making. I give you a very small example. In Italy, we have a legislation that was shaped in 1990. It's about weapons control. It's a weapons expert. And it actually forces banks to disclose whatever transactions they make in the military sector for a report that has to be brought to Parliament every year, and which has to be made a public act. Well, on this bank transparency, a long-standing campaign now has been created, which has given a lot of individuals the power to go to a bank and say, no matter how much money I have, but I can bring a lot of people together and to tell you, DG or board, that if you don't stop supporting that the transaction or that military company, I will withdraw my money from the bank. I can tell you that many very interesting things have happened. Not just within the ethical banking system, but with the classical banking system. So I would like to also encourage or to say that individuals do have a power that...
Thank you. It's important also to showing that there are institutions that have a lobbying power, let's say,
Absolutely.
because they're in the industry, but they have an agenda that is not on the industry-like agenda.
Not the classical one. Yes,
thank you.
Let's put it this way.
Thank you. Should you want to join this?
Yeah,
No.
well, I'm a little bit gloomy, actually. I mean, I think you can regulate away quite a lot of the issues. But while governments can still, while the industry can still hold governments to ransom, as it clearly does in the UK, and while there are 700 industry lobbyists here in Brussels for every one consumer lobbyist, I think we're doomed. Sorry, that's really depressing.
But we have the one.
Well, we have others as well. So.
Okay, so let's go for a tour of questions. If there are questions, yes, remarks? Yes?
Yes.
And then, okay. Let's go ahead.
Well, since the turn of the century, there has been a movement towards corporate governance standards, codes of conduct, codes of ethics. but there have never been as many corporate scandals during that period, starting with Enron. But then the financial crisis is an obvious breakdown in corporate governance at its origin. Now, how can that be matched? How can one really translate all these nice standards into actual practice? During all that time, the institutions, well, the systemic ethics in these institutions did not really change, despite all the nice statements and declarations. And the failures in institutional ethics led to also unethical behavior of individuals who perverse incentive systems within these companies. Now, companies, there's a question of accountability. Companies and financial institutions have to account. They have to be audited on financial, non-financial information. But to my knowledge, there is no systematic audit of governance in these institutions. Why not introduce such a system, which has to be meaningful, which has to be under the supervision of regulators, but also under the control of stakeholders involved in these companies, and based on clear and meaningful criteria to prevent ethical washing. Thank you.
Thank you. I think very important point. Let's take it 3 or 4, and then we go back to you. Yes?
Yes, good afternoon, everyone. My name is Isabel Buska. I represent the German consumer organization here in Brussels. So I'm one of the one, and I have some more colleagues here. Yes, I wanted to comment on 2 points, actually. One that was mentioned earlier on the Dutch case about the oath and these kind of things. From what I understand from my Dutch colleagues from Consumentenbond, the Dutch case is actually a very particular one, because codes of conduct and everything that I would summarize as self-regulation, apparently in the Netherlands, is enforceable, because there is also an entity, usually a sector organization, association, that is responsible for this. This is not applicable, for instance, in the country whose consumers I represent. So I'm not sure that we can reproduce exactly that example in other member states of the European Union on whether it would change anything. All the self-regulatory measures that we've had in Germany for the financial sectors, at least, would not lead to any helpful things. That was my first point. The second thing I wanted to comment on is what you were saying about the pressure of consumers. We're very interested in behavioral economics, usually as consumer groups. So the standard literature suggests that 80% of consumers just trust. They go to the supermarket, they don't taste the things, they don't test it for safety, they just trust it's been done for them. 10% are informed consumers. In some areas, they dig into information, they read the notices, they compare prices, they try to find a new supplier. And the other 10% is the vulnerable consumers. That's for the general consumer model. There's literature that suggests that in financial markets, all the consumers are vulnerable consumers. There's even, in your Director General, a study underway right at the moment that looks cross-sector at characteristics of vulnerability of consumers. And this one apparently suggests that 75% of consumers show at least one characteristic of vulnerability, right? So when I'm looking at this is usually my business when I look at incentives, and there it comes to the point that was mentioned just before me, is what are the systemic factors that are in place that actually this is being taken into account, that certain things are being blocked off. And when you are telling that consumers as a group can exert pressure, which they obviously cannot as an individual, I would like to ask you, when was the last time that the group of 200 consumers came and I was asking for a mortgage as a group? I've never seen this. Thank you.
Thank you. Here and there.
Hello, my name is Julian Müller. I work for an Amsterdam-based NGO called SOMO. I am, by training, a sociologist, and therefore I don't believe much in ethics and culture, that sort of thing. I think these things give way as soon as the monetary incentives are strong enough, invariably. with a few exceptions perhaps. However, I believe a bit more in social structures and social institutions. So on that count, we've heard one interesting idea from, among others, I think Sue Lewis, professionalism. And I think my question therefore is well, how serious are you about the professionalism? I mean, professionalism can be, professional associations, professions can be socially quite powerful. They can have considerable regulatory capacities, and so yeah, you know, full-fledged professionalization could involve, first of all, having an association like the institutes of chartered accountants that you have in the UK, the bar associations that you have for lawyers, similar things for medical doctors and so on. These associations may take part in the training of, you know, their members. They may even have the power to sanction them. So perhaps you can't practice anymore in your profession if you don't, you know, if you've been disbarred, as it were. Yeah, and the like. And I mean, you know, setting up a professional association or professional financial, well, financial agents, you know, of financial professionals, I mean, could potentially sort of wrest some power away from the financial corporations and to the people working in them. So, I mean, so I'm asking you, how serious are you about professionalism as a social institution in the financial sector?
Thank you. The fourth one here, remark, just behind you. Thank you.
Thank you. François-Marie Monet. First, with due respect, Ms. Lewis, I don't think we should be so sad about what happens, because first, we're all here together this afternoon, and that's a good sign, rather, is it not? The second is that, if I may mention, you mentioned a few names of what we used to call has-been. I would like to mention another has-been. The name was Mercury Asset Management. It had been founded by a gentleman by the name of Mr. Warburg, and it was highly respected. Now, just as an example, in this firm that he had created, whenever an asset manager was particularly brilliant and had managed to create a return, let's not talk about return on equity, but a performance, right? Performance that would be better than the index by 1 or 2%. Now, we're talking about incentives. I don't know in other firms, but in that firm, what would happen, according to my sources, is that the gentleman in question would be called by his peers and be asked to explain how he had achieved that. You see, finance is not complicated. Finance is exceedingly simple. Each time you have a super performance, you have incurred a risk, right? The board members of Baring Brothers knew very well what the little guy in Singapore was doing, because he was really bringing so much money to the firm that you had to be blind and stupid or ignore it, you know, not to wonder why this has happened. I strongly recommend you read the memoirs of Mr. Bernanke, who explains in simple but very, very, very good terms the whole crisis. Of course, he doesn't ask too many questions, because you can understand it and why. But nevertheless, what I'm saying is that, you know, finance, if properly monitored, is a place where ethics has a great place, a great room. It's relatively simple. Accountability, that our friend de Culinaire mentioned, and you also, sir, mentioned, is clearly a key. Professionalism also is an avenue that needs to be explored. When you mentioned history of ethics, I spent 25 years in Geneva. I know that, you know, some Geneva bankers could be extremely moral in every sense, all right? Now, the problem, though, is that there was a structure, and I will end up with this, there was a structure where if Mercury Asset Management, you know, would allow some people to cheat openly, very quickly, they would lose their clients, they would lose their credibility, and Baring Brothers lost its soul and its existence in the end. Now, of course, when we're talking about HSBC, Citibank, and the likes, you know what they are. They are two, whatever.
Thank you very much. We said that in the third, there was a hand. Yes, please. At the back, 2 hands. And then we close the round.
Thank you very much. Alexandra Palinska from European Issuers, representing interests of companies quoted on European stock exchanges. I just wanted to reflect upon the remark of Mr. Budolfsen regarding Carlsberg and other non-financial companies. Well, European Issuers represents mainly interests of non-financial companies. And therefore, I just would like to warn against an unintended spillover of financial services regulation, which we already unfortunately have seen in the last years, which eventually unfortunately affects also non-financial companies that tap on capital markets to produce real goods and services, and also sometimes, for instance, use financial markets to hedge their activities, but for instance not connected to financial services, but rather, for instance, to the if these are energy companies or even sometimes insurance companies or even some others that are basically using hedging because they are involved in import-export. Therefore, I think it's just important to keep it in mind. And last but not least, I very much do support ethics. And I think that there is still hope for ethics and morality. And I think in some countries, especially Scandinavian ones, I think we've seen a lot of positive examples in that respect. Thank you.
Thank you very much. And there is a last word.
I'll stand up as well because it's so difficult otherwise. I'm Josina Kamerling. I work for CFA Institute, which is a professional organization of finance professionals. And at the heart of this organization is our CFA charter, which has an ethics component to it, which each year our charter holders have to sign to. So I do agree the professional side is extremely important and needs to be gone into. But I want to refer to the gentleman who mentioned the Warburg case. And I used to work for Morgan Grenfell, which was another merchant bank way back in the 80s. And it was a simple organization, partnership structure, very simple, with responsibility. And if you as a young person went beyond your book, you would be hauled upstairs in front of the partners and asked to explain why indeed your profitability was way beyond what was expected. And I think the issue we have now is that most financial organizations are so large and recomposed of many-fold investment banks, brokers, commercial banks, etc., insurance companies, you name it. And who is to define which culture is dominant in those organizations? And I think that is one of the problems. So maybe the panel could comment on that. Thank you.
Thank you very much. We are reaching the end of our time slot. So I suggest that for the last round, the speakers integrate what we have said, what are the points of urgency, but also referring to different remarks, suggestions, questions that have been put here. And we have a list from professionalization to the fiduciary duty related to the customer, to the whistleblowing. We should not forget this issue raised in the previous round of remarks. The audit of corporate governance, possibly extended or included, a kind of eye on what's happening with culture. We have been speaking about risk and performance and risk as risk attitude being encouraged by some incentive structures. So if we were to end this session by saying, setting a kind of to-do list in terms of urgency and also who can do it, maybe we could have not lost our time. So please start, whoever wants to start, referring the urgencies to the urgencies and picking of the remarks that have been done here. And of course, of your own thoughts. What is the most urgent to be done? Would you? Are you okay? Okay, so please. Yes. Yes. Extremes are always.
Yeah, okay.
I'm ready.
We have a reception afterwards, right? so I would make some very brief statements and then an intervention. And I will say, okay, the banker's oath is a failure. Never trust professionals. And whistleblowing, we must ask the Commission about tomorrow. I have a meeting with them tomorrow. So this, I think, should be... I will have some questions and dialogues under the reception. So now I would like to address the way forward, as you were talking about. What are we going to do, and actually where do we want to go? Because are we prepared to take the steps that we ourselves think are necessary to change the scope of the finance sector? Because if we, of course, I go back to what I have said about if the strategies of the sector are laid to match the demand for the owners, we have to assess and we have to give our full attention to these owners. And who are they, in fact? Who are the owners? Well, I would divide them into 4 groups. One of the groups is employees, in fact, owning quite some part of some banks, customers, and other private shareholders. And then we have the big investors, which is, in fact, often one of the smallest groups in the finance sector, but they decide most of it. These are the ones to handle, the last group. And you could say, who are they? Who are the big investors in finance? In fact, it's us.
Yes, pension funds.
It's us owning the finance sector. You and I. Some of the biggest investors in the world are pension funds. They are state funds like the Norwegian Oil Fund and other big investors, in fact, representing society. So the paradox of this is that the hunt for short-term profit, for increased return on equity and focus on shareholder rather than stakeholder value is generated by people who should represent us, society, and a balanced approach for a long-term and sustainable result, ensuring good pension and creates jobs and growth doing so. Of course, we could also talk about the need for regulation of top management, remuneration models, benchmarking, measurement systems. There's a need for a lot of things there, and I could also, and I should have, being trade unionist, I should address the urgent need for collective agreements all over Europe. The need for the responsibility ensuring high social standards, also when jobs and function are being moved to low-wage countries. And it's absolutely not to neglect this. Well, we will not have time to discuss it later, but perhaps during the reception. But the first matter to address here is transparency. Transparency about who owns the sector. Transparency about the perspective. Is this long-term? Is it short-term? Transparency about these investors' demand for return on equity. Transparency to the company, to the society, and also, in fact, to us, the real owners. We should have access to determine the investment profile. We should have access to define and discuss sustainability in investment. Because sustainability is not just about the green footprint.
Yes, exactly.
It's about connection to society. It's about job creation. It's about working conditions. And to finish where I started, it's about company ethics. So what do we want to do with our own pension schemes? We have the possibility to change the scope if we stop our hunt for short-term profits and use our political and economic power to change the market rules. Because if we really want to push the market, we have a possibility to do so. But we really have to ask ourselves, do we actually want to do so?
Thank you. Ju, you want to?
Oh, yeah, the thoughts are flowing. He's speaking, and
I agree with a lot of that. Sorry, I can only hold 3 things in my head now before I have to write them down. I haven't written them down. So I kind of disagree with you on professionalism. I do think it has a role to play. And we've got a Chartered Banker Institute in the UK, and it just doesn't have very many members compared to, for example, the Institute of Chartered Accountants in England and Wales. And I just think it does instill pride in people and a sort of natural wanting to do their job well. So I kind of disagree with Michael on that. The other point I wanted to pick up was about accountability of directors. It was quite a point you made, wasn't it? Quite well. I mean, just lock them up, frankly. I mean, directors need to be Well, they did with Enron, didn't they? I mean, they need to be kind of personally accountable, and people say, oh, you'll never get good people to work for banks if you do that. And I say, well, they weren't that great to start with, were they? You know, if you look at the directors of the Royal Bank of Scotland, they were completely in thrall to Fred Goodwin, who bullied his way into doing all sorts of completely mad things that now we're still paying for. So, I mean, lock 'em up is obviously a little bit facetious, but actually I do think more personal responsibility for directors.
Thank you.
Okay, I'll stop
go
there.
ahead, go ahead.
No, I'm stopping.
Sure.
I'm stopping while I think I'm ahead, but I'm stopping while I'm ahead.
Don't worry, I only can keep two or three ideas in my mind. So, there were so many things you said I would have liked to react, but I won't do that. But you said one thing that was very important, but more, of course, at least. You said the investors are key, and this is at the moment also our thinking. We should look very carefully at the big investors. They have the ways and means to influence companies, influence banks as well. And we have a little bit forgotten almost the lesson of the crisis, where there was a lot of short-termism in the financial sector, in the economy as a whole. And we have afterwards realized, no, we must invest more in a long-term, sustainable economy, long-term investment and all these things. This thinking was a bit forgotten, but it is coming back. And it's coming back now also in the Capital Markets Union that was just adopted. And for your information, we at the Commission, we will launch very shortly a consultation on ESG investment. What is ESG investment really all about? And then you come close to things like how do you influence a company, the power of these big investors on industries in which they invest or not invest, and for what reason. Someone said, I think the first question was about, should you not do a kind of audit check of the quality of corporate governance? I must say, yeah, checks and balances, I'm a bit skeptical. And I hope I don't stand on anybody's toes, but is this not another, industry that you create, and the Big Four will be very happy and they're going to do audits? Is this really what we need? I can see an advantage, but I'm a bit skeptical, to be honest. Thank you.
Greta?
Basically, echo what you were saying about transparency. Transparency is an end in itself, but it's also a strategy. It's a tool. It's not, it's a process. It's a tool. Of course, you can disclose everything, but what do you do with that? So it doesn't stay alone. Transparency has to go with a series, I think, of, for me, I guess, urgent tools, legislative tools that are missing in many countries, certainly in mine. One is, I go back to this whistleblowing, I think, clause, which is very important, and it goes also with the level of professional deontology that you can have, and which today is infrantic, because if you do, walk the line of integrity, you are out, basically. So I think it's a conflict of interest rules. I mean, financial sector is not different to any other industrial sector. Well, the institutionalization of the conflict of interest seems to be the rule today, and I think this is a major, major problem.
It's called synergies.
Yeah, it's also called the multi-stakeholder. I'm sorry, when the multi-stakeholder model is. I work in the health. My sort of professional background is on the health domain. I can see that, and I can especially see the impact that it produces on the right to health for people. So another issue has to do with the revolving doors. These are all tools that are known to the European Commission. We discuss about this, but I then would like to side with Sue when she says that there is such an asymmetry of lobbying power, of fire between those that pursue the speculative interests and those that pursue the public interest, that I think that is the most crucial priority to address, and for that we will never be thankful enough to Finance Watch for existing, and you know, we wish Finance Watch to increase and enhance its activity, because it's a systemic thing. It's not a question of, you know, inventing tools and inventing. It's a systemic thing. You know, Colin Crouch writes about the strange non-death of neoliberalism, when it is clear that it is, you know, I guess it is a process, I guess it's a breath of history. We don't know how it's going to end, but in a way we have clearly nothing to lose. You know, the quantitative easing, it's okay, but on the other hand, we are seeing that it is preparing the next, you know, it may be preparing the next financial bubble. So there are, as someone was saying before, we are at a very delicate transition period. I believe these legislative tools are important, a systemic approach, and finally, information, training, communication, protagonism of people. Certainly you will never see the 200 people asking for a mortgage, but you will have 200 people in a big investor putting pressure, as it has already happened, for, you know, putting pressure on a banking policy. That has happened. I mean, I go back to the arms trade, because I think that's the most advanced experience that we have, not only in Italy in that respect, in Europe, in other countries. Information, and even information and training of the members. I mean, of course, dimension is important. We are a small bank. We are a small cooperative. Dimension, however, is important. The size of the company, which is one of the issues, I think is crucial. And there should have to be regulations in that respect. Today, we talk not only about the HSBC, you know, scandal has shown that the mantra is not only too big to fail, but today in the US is too big to jail. Well, if that is the case, no, this happened, it was a clear communication between the Secretary of Justice and between the Secretary of Trade and the Secretary of Justice in the US after Falciani came out with the list. So if that is a world that we live in, the too big to jail, well, then we really have nothing to lose, and we can be creative with new ideas. And going back a bit to the history of the financial sector, I think there are very good practices that we can still use.
Thank you very much. I think that we had a very nice conversation. I would like to thank the speakers, but before this, 3 short points. First point that we have not addressed, but I think it's a very important one, done by the fact that, well, ethics is not the same, does not ring the same bell in all the cultures, and even within Europe, and of course not to speak outside of Europe. We used to run a competition, Ethics in Finance. We try to run it in different languages, and then you see the difficulties even of getting the proper translation, but very highly qualified people, from one language even to English in order to bring it to the jury. So you see that everybody is expert more or less in technical speech in English about finance. But when we move to the financial dimension, one has to take into account the cultural blend, the local traditions, and so on and so on. So it is very important. We did not address it, but I would like to say the second point is the systemic transformation. It implies the macro level, social regulation, it implies culture, but we did not address really the micro, the individual agents somewhere acting there. We have been speaking about the incentives, but here still there is something to be discussed. What about the person that is working for a given institution, regulator, etc.? And we have spoken very little about the training, and training is important. Started in the business schools, universities, and of course within the institutions and professional bodies. The last point I would like to make, we have been focusing on ethics, finance, and we have been, except for the last round, but focusing on the profession of intermediations. Only in the last round it came up that, well, there are somewhere the owners of the funds, the ultimate owners. And of course there are somewhere ultimate users of the fund. And when we want to speak about finance and ethics, we should probably get in the picture the 3 building blocks, intermediation of course being the core, but the users and as well as the ultimate owners. So thank you very much for having played the game, and I think that we did advance a little bit, at least, our own thinking. Thank you very much.